Well, good evening, one and all, and welcome back to Rainbow Investing, where we examine a spectrum of ideas to increase your long-term wealth. Now, this evening I wanted to talk about bank accounts and how to use them, because quite often they're a very overlooked part of your financial plan, but they're actually the gate of your financial life. You know, your money comes in, money comes out through bank accounts. So I thought it would be a really important area to examine as part of long-term wealth creation. Okay, so let's get right into it. Now, there are two main types of bank accounts that we all use. There are other accounts that have more specialized purposes, but I thought tonight we'd talk about the main two, and they are savings and transaction accounts. Now, most people will know the difference between these two, but just as a refresher, basically a transaction account is often linked with a bank card, so your EFTPOS card, and these accounts basically easily facilitate the movement of money in and the movement of money out. So you can pay your bills with them, you can pay your friends with them, you can pay other people with them, and anyone can put money into them. But they don't often pay an interest rate, or at least an interest rate that's more than 0.01%. So that's something to keep in mind. If you've only got one bank account and it's a transaction account, it might be a good idea to open a savings account. Now, a savings account is a little bit different to a transaction account. There often won't be a card associated with the account. And savings accounts won't often let you move money as freely as a transaction account will. You often won't be able to pay an interbank account. So a bank account that's not within your bank, or often even a bank account that it's external to your accounts. You won't be able to move money in or out using a savings account. But a savings account normally has a much higher interest rate. So, for example, a transaction account might have 0.01, as we said earlier. A savings account will often have around 2% interest. So as a good start, think about the kind of bank accounts you have. Maybe if you don't have a savings account, I would highly recommend you get one, because as we've talked about inflation before, if you've seen my other videos, it's a whole lot better if your money is sitting in a bank account to be sitting in an interest rate that at least covers inflation, like a 2% rather than a 0.01%. That can make a big difference over many years. So if you're looking at a savings account in particular, there are a lot of things that can make accounts stand out. If you're shopping around for an account, and we'll talk a bit about that later, there's a few things that different banks try and do with savings accounts to try and get you in. Often savings accounts will have what's called a honeymoon rate. So if you open an account, for the first, say, 6 months of you having that account, you'll get paid an interest rate that's about maybe 3%. But then after that 6 months is over, you'll go back to maybe 2% or 1.5%. So that's a really important area to have a look at. Also, and this is quite common, often savings accounts will have a base interest rate, so say 1.5%. But then if you do certain things, you'll be able to get a bonus interest rate, so maybe another 1%, so then you're getting 2.5%. Now, each bank is different, but they'll often have rules around this, such as you can only put money in and you can't take money out. So if you put money in every month, you'll get the bonus rate. And if you don't withdraw any money, you'll get the bonus rate as well. But if you take money out, then you'll get the standard rate. So that's a really important thing to think about if you're opening a savings account. Some other conditions I've seen is you'll have to, if you have a savings account, you'll have to have a transaction account as well, and you'll have to use the card on the transaction account, say 5 times a month, to get that bonus savings rate with the same bank. So there's a whole bunch of different conditions that are attached to savings accounts quite often. So if you're looking at opening a savings account or finding a savings account that's paying a higher interest rate, keep those things in mind, because often banks will advertise the bonus rate, but they won't actually tell you the conditions. And getting that higher interest rate is really important if you want to compound your money over time, because even though, you know, a 2 or 3% interest rate isn't a lot compared to some other investments, it still will compound over time. So if you have $100 in a bank account and it's 3% interest, you'll have $103 the next year, and then $106.30 the next year, and it will keep going up and up and up. So that's a really important thing to keep in mind, and a really important reason why everyone should have a savings account. So the second thing I want to talk about is how many bank accounts should you have? Now, this is an interesting question, because I definitely recommend you should have at least 2, because maybe for some people 2 bank accounts is just fine. They have an everyday account and a savings account. But say you have a really long-term goal, like saving up to buy some shares or saving up to buy a house. You might have one savings account for that, but then you might have another savings account where you're thinking, oh, I'm saving up for that holiday I want to take next year. So maybe it's a good idea to have two savings accounts so you don't get the money mixed up. Maybe every paycheck, you put $100 in this savings account and $100 in that savings account. So for this question, I want you to think about the goals you have and maybe tailoring your bank accounts to those goals to make sure that you're getting a consistent, clear savings plan in place for what you want to achieve. So this third point I want to talk about it leads on from my first point, but it's all about fees and interest rates. So you don't often see bank account fees anymore. They used to be a thing. State governments often used to have taxes on bank accounts, so bank accounts would pass them on, but those have largely been abolished in Australia. So the number one rule when it comes to fees is stay away from them, okay? You don't need to pay any fees holding a bank account, because when you think about it, when you put money in the bank account, even a savings account, you're earning 2.5% on that money, but the bank is taking that money and loaning it to other people at 6, 10, 15%. So why on earth should you pay the bank to hold your money for you when they're already making a profit on it? So if there's anyone out there that has a bank account with a fee on it, get rid of it. Change banks. It's not good. So the other one is, of course, interest rates. Now, as I was saying earlier, you want to make sure you're getting a good interest rate on your money. Because it's your money, you want to make sure it's working the hardest it can for you. So the fourth point I want to talk about is shopping around. Now, I want everyone who's watching this to actually have a look at the interest rate your savings account is paying you. And I want you to have a look at other banks maybe and see the interest that they have on their accounts and maybe compare them. But don't stop there, because most people don't realize this, but you can actually go beyond the four big banks. There's quite a lot of smaller banks out there: Bendigo Bank, Bank of Queensland, UBank. But there's also credit unions and mutual societies. There's a lot of variety out there when it comes to banking services. You don't normally just have to stick with the big four banks. Now, obviously, when you shop around, have a look at the interest rate you're getting on that savings account, but also have a look at those honeymoon rates that I was talking about earlier and those other conditions that might be attached to a savings account. So I think that's a really healthy thing to do for your financial future. Make sure you're getting the best deal for your money, because it's your money at the end of the day. Alright, so the last thing I want to talk about is paying yourself first. So if you've watched my video on savings, you know this is a really important philosophy of mine when it comes to building long-term wealth. And bank accounts can help with that. So what I do when I get paid is the money comes into my transaction account. And this is on the first day I get paid. The money comes in and I send it off to various other accounts. Okay, so most of them are savings accounts. So on that first day that I get paid, the money is getting distributed to my other accounts so that interest rate can start working as soon as possible. But it can also help you manage your money, because as I've said before, if you take the money out of your account straight away, and if this is the account you're using for your everyday life, paying bills, buying dinner, buying groceries, whatever, it's important to get your whole paycheck out of that account as soon as possible. Because psychologically, it's far easier to spend less money when it's not staring you in the face. So if you put the money that you get from your paycheck into one of these accounts, it's far easier to save money. But there are other ways you can do this as well. If you've got 1 or 2 different savings accounts, you can set up a direct debit. So every time you get paid, say your payday's every Wednesday or every second Wednesday, on that Wednesday, set up a direct debit that takes money out of this account into this account. And then you don't even have to think about it. It's already gone. So you're automatically, instead of working with $1,000 or $2,000 or whatever, you're working with $500 or $600 or whatever amount you work out you can save. But I think that's a really useful way to use bank accounts. And all banks do it. You can just go into online and set up an automatic transaction, an automatic direct debit, and that'll do it for you. And it's a really easy way to start saving money. Alright guys, that's all from me for now. I hope you've learned a few things about bank accounts. It was really fun making this video. So if you like the video, drop a like on it, hit the subscribe button if you haven't already. We talk personal finance and investing. I'll be back with some more videos soon, but for now, good night.